Yeah. Surprise, a little different than you used to. Dropping these bars on YouTube, knowledge I introduce you. We chasing this money like it's the prize, it's the voodoo. Fugazi, it's just a lie we buying into. We need some cars on deck. Get the rollies, get the Moe, all the Mars on deck.
Good evening, everyone. Welcome. Thanks for joining me. I didn't do this yesterday because I just wasn't really feeling up to it, to be honest. So I thought we'd move this over to today. You may have noticed there was also no podcast episode today either. Yesterday, just the weekend just wasn't my weekend. So wanted to kind of put my feet up a little bit and just focus on me a little bit. So I thought I'd do this evening because I'm sure this will be something that people are kind of come accustomed to. Leandro, welcome. How are you? And so, yeah, we'll spend, I'm going to give this an hour. I'm going to give this until 7:30 to answer any questions that you may have in this week's, or last week's, I should say, finance clinic, and see how we go from there. But I don't know how, this is very, very early on. I mean, we're at 6:30, and I normally do this on a Sunday where people are kind of more at home. I'm fully aware people will be in transition to hearing from work and stuff. So let's see who we have join and how many questions we basically get. And we'll play it by ear, essentially. So let's just have a look and see here. Richard, how are you, mate? I'm good, mate. I'm good, thanks, Rich. It's I didn't have a great weekend or anything like that, but there you go. It's one of them ones, really. So I just kind of decided to kind of just chill out, really, to be honest. And then this week, obviously, I've got a lot going on. Got a full day of meetings this week. I'm actually going to Greece for a wedding on Friday. Coming back on Monday next week. So I'm not going to have a finance clinic next Sunday. So over the weekend, it'll be a little bit light. But luckily, I'm not going to part of Greece that is on fire. Luckily, we're going to Chania, which is away from Rhodes and away from Corfu. So hopefully, we'll be okay. The temperatures are in the 30s, not the 40s that have caused all the wildfires. So we'll see how we get on. But I leave for there on Friday. I get back Monday night, early Tuesday morning next week. So yeah. South London reseller saying, saw your video on budgeting. This was really useful for me. That's good to know. Thank you very much for the feedback. It's nice to know that because obviously these type of videos are always kind of put out there. But a lot of the time, knowing that it's useful is a really good thing. And I think with the book, the system isn't a new revolutionary look at budgeting, but it is a different methodology, or at least my methodology, which I put into the book. And I think the reason why it works so well for me is because it's not really focused on numbers. So you've got things like the 50-30-20 budgeting method, which everyone talks about. You know, it almost gets you to the point where you have to focus on getting within a specific ratio. And that's fine on its surface. But I just feel as though focusing on, right, my essentials are this, these are my non-essentials, then allocating money to that third part, I think that makes more sense from a practical point of view, because it doesn't matter what you do, you still have your essentials that you need to pay. And if your essentials come to 60%, they come to 60%. That's just what's up. And I think that by focusing and being a little bit more calculated with the essentials, the non-essentials, I should say, it allows you to make room for the other part, which is for the aspirations, goals, so on and so forth. And I think looking at it that way, it certainly helped me. So thank you. Someone said, don't start with the Dubai thing. Hey, listen, got me on a tangent in that last slide. But then again, you know what I mean? I do think that, you know, it's okay to have difference of opinions, and that's completely fine. I think sometimes we live in a world where you're not allowed to have difference of opinions, and that is completely unhealthy. And in instances where you can have differences of opinions, it's very, very rare these days that you can actually have a conversation or some dialogue around it. Like, one person has to be right, one person has to be wrong. And whilst that may be true to a certain extent, you can agree to disagree. You know what I mean? And people will get very, very opinionated about certain things. But I just think that if you've never been somewhere, don't judge, because yeah, you can read stuff on the news. Doesn't mean that it's true though. And the lived experience of something is very, very different to what you may hear or see on social media. You know, there's a story going around of an American lady who's been arrested because she got into an accident and then she caused a massive ruckus. It's like, you can't do that. Can't do that out there. You cannot do that out there. It's all about modesty. All that kind of stuff is really, really important, and decorum, very, very important. A lot of them are very family orientated as well, so certain behaviors aren't tolerated. Got to be careful. Got to be careful. But anyway, I digress. Kush is saying, what is your stance on investing in properties via a limited company in the current climate? Investing in properties and limited company, if you're planning to have a large portfolio, makes sense from a tax income, well, capital gain, not capital gains necessarily, but from an inheritance tax point of view, from that overall taxation arc, makes sense. In the current climate, I think you need to know what you're doing. I think you really, really need to know what you're doing. I think the property space is kind of like the stock marketplace. People have been for the last 3-4 years screaming about how much money you can make and how it's easy because it's so cheap. Not anymore. So there'll be a lot of property people out there who are not necessarily going to be singing the praises of property right now, or at least telling their story of how they may be struggling because for the last 3-4 years they've been telling anyone and everyone who will listen that it's the easiest way to become a millionaire and it's easy to do. And sorry guys, but that's not the reality, especially when you're leveraging. When you're leveraging, it's great when you have low interest. When you're leveraging and your interest costs are going up, that's where it becomes really, really problematic. It becomes a huge, huge problem. And I think there'll be a lot of those property guys out there at the moment who will be very, very worried for their own personal portfolios, or at least they'll be feeling the financial pressure. I would like to think that a lot of them would actually share that, hey, this is what's going on. This is how I'm finding things right now. This is what I'm doing to kind of, try and counteract. These are the mechanisms I have in place to try and mitigate this potential risk that has now happened. We'll see. I don't really cover a lot of property, to be honest, and I'm not a property expert, so I can't really speak on it confidently in that way. But from a limited company point of view, there's nothing wrong with investing in a limited company, particularly if your intention is to get a huge portfolio of properties underneath you, because it will become problematic when you start selling off these companies, or if you want to pass those companies on to family as a legacy. Oh, I like this. And this does send me a little reminder, actually. Let me just jokes from Richard here. I love this. Pushed up this poor guy's head for YouTube like button. Upon seeing the like button, I did as I always do and smashed the like button. So anyway, I'm in court on Friday. That reminds me. Look, if you do get value from this live, I ask people to smash the like button purely because it takes 1 second, and because it gives an opportunity for you guys to ask me questions and we can have an interaction. There may be somebody out there who's searching YouTube right now for an answer to a question that you ask. And by you being here, you smashing the like button, it means that after this live is done, the YouTube algorithm is more likely to recommend it to someone who's searching for similar things that we've spoken about here on the live. So it helps with the growth of the channel. And I do want to say thank you to everyone who's been subscribing so far. We're now at that 908 point. So we're not too far off that 42,000 mark at the moment. So, and that's down to you guys. Thank you very, very much indeed. And thanks for that, Rich. Thanks for that brief reminder as well. Oh my God, you guys are going to drag me into this Dubai conversation. So we were talking about Dubai basically on the last live. And I know you put a laughing emoji there, but like, it's because I've been going there for a while, and I've got friends that are there. I think sometimes it does get a bad rap, and I think sometimes you have to go somewhere to really experience it and see it for yourself. And that's not to say that it's a perfect society. It's not, but they are very, very forward thinking, and they are trying to kind of accommodate more Western cultures, and they certainly have in a large part of Dubai as well. But with that, you still need to be mindful. I think you might be okay in Santorini, Laura. I think you might be okay in Santorini. I don't know that there's fires. The main places where there were fires this morning were Corfu and Rhodes. Those were the two places. So I'm going to Chania, um, and we're okay there. So it's in the 30s. I don't. It would be worthwhile checking the temperatures in Santorini. If they're going to be in like the 40-degree mark, then that's probably where you're going to run into a little bit of trouble. I mean, I was in Dubai, about a month ago now, and the temperatures out there were like 42, 43. One day it was like 45, and it's so hot. I mean, there's nothing to burn out there. It's it's sand pretty much. So you're not going to be at risk in that part of the country. But it 40 is a lot. It's really, really hot. So hey, listen, I'm not saying anything, all right? To be honest though, I did have a good read of the story, and it tells. It should go without saying that because you can behave a certain way in your own country, you shouldn't just assume that you can go to another country and behave exactly the same way. And this is the thing that often surprises me. We will complain that people who come to this country should respect our laws, right? Our laws and regulations, our culture. But then we go to another country and we don't respect theirs. And this is a prime example. She behaves a certain way back home. She thought she could do exactly the same out in Dubai. Unfortunately, it's a no out there. She gets locked up. And she's had a track record of it, apparently, according to sources and stuff like that. It's unfortunate, but it's always important to remember. Always, you can't get away with what you do with at home elsewhere. I took a fixed rate mortgage for 10 years in 2019 at 2.65%. Wow. Mate, what made you take a 10-year fixed rate in 2019? Did you could say you had a crystal ball, right? But seriously though, I'd love to know why. I'd love to know what your thinking was behind taking a 10-year fixed rate, because I remember doing a poll on Instagram. This is like last year when rates were still relatively low, asking if anyone would take a 10, 15-year fixed rate. And everyone was like, no, why would I want to hold a mortgage for that long? And I'm like, over the lifetime of your mortgage, you're just doing double, really, maybe 3 times 10-year fixed rate term. So why not fix it for that longer period of time? But people weren't up for it. So you're an early adopter in that right there. And you're saying how I remember people criticizing my decision from all sides, saying it was a foolish move. It got to the point where I'm like, yep. Listen, I can completely understand that, because people's thinking weren't like that. And what I said on the Instagram story was, if you look back over where interest rate curves were at that point, and this is again last year, there was only one way interest rates were going to go up. And unfortunately, we saw the catalyst for them going up in inflation last year. So I would say you're ahead of your time, mate. Really, really ahead of your time. Enjoy that fixed rate at 2.65, mate, because that's awesome. That's really, really good. Interest rates got Samuel Leeds crying on YouTube. You know what? I think I saw a TikTok of someone who showed a clip of him moaning about the fact that, yeah, interest rates have gone up, and so it's eaten into the margin of his properties. I've never met the guy. I know people who have had him on their podcast. I wouldn't have him on my podcast, because I don't know. There's a lot of noise around him, and I think he's just one of those ones where he sells the dream as much as he possibly can. And he may have tidied up his act now, but he's had very questionable things around him. He's one of those ones that makes it look so easy. I watched a TikTok of him talk about, I'll tell you what to do to get a really nice property deal and get rich and make a lot of money. Just buy a house cash. It's like, Not a lot of people are able to buy a house cash. Buy the crappiest house on the nicest street, really run down, buy it cash, put a load of money into it. There's something called bridging loans. Bridging loans. Bridging loans are, all right, number one, extremely expensive, particularly if you go over the bridging term. Extremely expensive. He then says in the same sentence, I've got a bridging loan company. I'm like, okay, no wonder you're saying what you're saying. Right? So buy the crappiest house on the street, buy it cash. Not everyone has cash. Put a lot of money into it, use a bridging loan. It's like, okay, look, you make it from a step by step, simple enough. But the practicalities are very, very different for a lot of people. A lot of people aren't going to be in that position to be able to do that. So I'm sure he's very, very good at what he does. He's one of the ones that I think he sells the dream, and I think the reality sometimes can escape. And I think whenever you're trying to talk to people about aspiring to certain things, you can't miss out the reality of the journey that they're going to go on when selling them the dream. It's like trying to get a baby to run before he crawls, right? And you know for a fact that there is that progression between crawling, standing up, taking those first few steps before they can actually get to running. And, there will be falls in between all of that, which will be quite painful. You try and protect the baby as much as you possibly can, help them, prepare them as much as you possibly can so that, you're there to encourage them. And I don't think people like him in the property market necessarily do that duty of care so much. That's just my opinion. I could be completely wrong though. Pick a fund. Hi Pete, you mentioned investing in the UK mid caps. What are your thoughts on the lower inflation print? Headline excitement, the real move lower from here. Thoughts on the lower inflation, but you mean the forecast? What do you mean exactly? Can you elaborate on that specifically for me so I can know exactly what you're asking me here? So you're talking about the lower forecasts that have now come out. I mean, if you're looking at the interest rates, the interest rates was supposed to spike at 6. We saw a positive move in the UK markets off the news of that last week. I don't know where they are. Someone posted a message yesterday. I was looking at the FTSE 100 this morning, and it's like is down 0.57 or something like that. If you look over a 5-year chart, I haven't looked at the mid caps or anything like that specifically to know where they are currently. But elaborate on that, and I can come back to it. I'm going to email to order 2 books after your live. Been at a wedding. Do bride and groom have gone to Corfu? Oh my God, they've gone to Corfu. Yeah. When did they go, mate? I think there are rescue flights out of there at the moment, which is mate. I hope their honeymoon isn't ruined. To be honest, that's tough, mate. Because the news this morning was horrible. It was really, really horrible. But yeah, email me on the books. I've got some here. So what I'll do is, if you email me in the books, I'll sign both of them for you, and I'll put them in the post for you as well. So you'll get them. I'll try and get them out this week before I go on Friday. So yeah, just message me on Instagram or drop me an email at hello@peterkomalafe.com, and yeah, we can get one out to you. All right, there's a conversation going on here. So it's someone saying on a 5-year fixed rate, 2020 1.49. See, I'm on a 1.49, and that was on a 5-year, but mine ends in October, basically. We're never going to see those type of rates again, man. We look back at these days and be like, wow, couldn't believe that interest rates were that low. But hey, those were the days. Those were the days. Hey Pete, I was wondering, what do you think of Robert Kiyosaki, Rich Dad Poor Dad, his book Overall Philosophies on Money? I think his overall philosophies are all right. I think I don't agree with some of the things that he talks about in that book. Not owning your own home. I don't agree with that at all. I think in order to have options later on in life beyond just the option of you need a high income, I think you need to put your money into an asset. And so owning the home that you live in gives you that option. Yes, you can have rental properties, that's fine, but there are tax advantages to owning your own home. And when you think about people's net worth, property often fills a large part of that. And if you live in your own home and you sell it, capital gains tax isn't necessarily an issue in most cases. Property is, then inheritance tax, all that kind of stuff. Your rental properties, they will eat up part of your residence nil rate band for inheritance tax purposes. So there is a line to be had there in terms of the actual planning of it. But I think, generally speaking, yeah, its philosophy is great. I mean, the ironic thing is, he made a lot of his money from the book. It's not like, how much of that, he's probably invented a lot of it. I think it's solid. There's just little things I just don't disagree with, but his book is one of the best selling books of all time when it comes to money. So he's obviously done something right, and his communication in the book is actually very, very clear. The quadrant around how wealthy people, they don't work for money and all that kind of stuff. I understand it. I do, however, think that to a certain extent, he is also what's wrong with our system. And let me explain why I say that. So he talks about the fact that wealthy people don't work for money. And what he does personally, he lives off debt. He's leveraged. He lives off debt. And the reality is you don't pay tax on debt. So he has clocked the system. He's made so much money from the system, but he's one of those millionaires that isn't giving anything back at all because he's leveraged. He lives off debt by his own admission. And I think that isn't necessarily, that's not responsible. That's not the kind of example that I would want to give, but that's just me. Yeah, all right, fair enough. We all paid tax and nobody likes paying tax, but we pay tax so that society can continue to function, right? So the people less fortunate than us can, have at least some kind of assistance and help. But if you have people like him who are all very, very wealthy, who pay zero taxes because they live off debt and they leveraged everything intentionally so to avoid tax, that's problematic. That's really problematic. And that's not his fault. That's our system's fault. And yeah, I mean, I've watched a lot of his interviews, and sometimes he can come across really brash and really arrogant. Got to stay humble. Just scanning through the comments right here. Bear me 1 second, guys. Let me just scan through here really quickly. Yeah, I mean, Richard's just saying, this is an interesting statement by Richard. I'm legit nearly at the point where my savings is almost at the same as your outstanding mortgage. Very tempted to pay it off now, but it would be foolish to do it early when savings rates are so much higher than my fix. I mean, that right there is a really difficult choice to make, because ultimately what you're doing there is you're doing the mathematical calculation, which is 100% right. If your mortgage is the interest, well, it depends on how far you want to go down the route of this calculation. Because on the surface, you may have a mortgage at 3% or 2%, and you could be getting a 5% instant access account right now. But on your outstanding mortgage, if it's the same as your outstanding mortgage, the question is the interest that you're earning, and that's the mathematical thing. But I think I always say on this channel, what is the the psychological benefit of paying off the mortgage and knowing it's no longer there? Would you sleep better at night knowing that the mortgage is paid off, or better at night knowing actually, well, I'm earning more money on my savings account than the interest I'm paying on my mortgage? That's a really, really difficult one to answer, possibly. And one only you can answer, mate, to be honest. No one can answer that for you. And so you do what you feel is right. If you're happy with it being in a savings account because, yeah, the balance is matching the outstanding mortgage, I'd look more into the calculation of the interest really on the mortgage, because your balance might be the same, but the term of your mortgage will determine the interest that you're paying. And if you were to pay it off using the savings, how much interest you would save. And unless you have a very short period of time left on your overall mortgage, I can't see how savings rate would save you more than what you would save in interest. But it is worthwhile digging into those calculations just to see. But again, what makes you sleep better at night, right? Neil, evening, Peter. I've got a remortgage interview tomorrow with First Direct on the phone. Anything to be aware of or to remember? Also, just put my first 650 quid in a stocks and shares ISA to get started. Amazing, mate. Listen, look, if you've got your remortgage interview tomorrow, just be mindful. I mean, you're going directly to a provider, right? So they won't be able to search all of the market for you. But then again, with First Direct, the whole overpayment thing, which I covered here on the channel. Whew, I mean, if you want to plow money in to pay down your mortgage without the penalties, all day long, mate. But I think ask as many questions as possible. Number one, don't feel as embarrassed to ask any questions. They're going to ask you a ton of questions, mate. And if for any reason you're curious as to why they want to know something, ask why. Ask why. Um, and just be tentative in terms of the numbers that they tell you. Be tentative in terms of the calculations that they give you as well. I mean, they'll send you everything out in the post anyway, so you can see it, review it, make sure that it's all correct. But ask as many questions as possible. But because you're going with them directly, they're not going to be whole of market. So just be mindful that they may offer you a 5.8, but you may get a 5.75 or a 5.7 or a 5.6 elsewhere. But if you're using them for the fact that you want to be able to plow as much money into your mortgage as possible, then paying that little bit extra is irrelevant, because at the end of the day, you're going to have the full flexibility to be able to pay down the mortgages as you please and as you're choosing. So ask lots of questions, mate. Ask lots of questions. And I was just saying here, same, but I'm also trying to invest as well. And with interest rates being so high, I kind of want to earn a bit more money with a bit more with my money first, then throw everything in at 2025. See, not the only person thinking the way you're thinking, Rich. That's good. At the end of the day, guys, look, we're in a space now where finally it feels like interest rates are going to, begin to help cash work a little bit harder. And I think that's really, really important. And so there's nothing wrong with being like, actually, you know what, I want to take advantage of it and, try and get as much interest as you can, because we haven't been in this arena, for almost 10 years now. So by all means, you know, enjoy it whilst it's here for sure. Rich is also just saying here, if you need the money within the next 5 years, it's safer to have it in cash instead of investments. That is very, very true. Purely because, like, for 5 year term, uh, imagine we go into recession. It might take 2-3 years to come out of a recession, and even at that 5 year part, yeah, you might be two years off the bottom of that seeming recession, right? But you never know what's going to happen. So you do need that longer term kind of like view, really, especially if you need the cash. So yeah, be mindful. Oh, Vishal's just saying here, thanks for the advice on Nest. I mentioned it to my bro and he said it was expensive the last time he looked, but the cost have reduced since. Yeah. When they first appointed Nest to do all the auto enrollment stuff, it was really expensive. Now it's really, really cheap and very, very straightforward to do. So for my limited company, I pay into a Nest pension on for my company to pay into the workplace pension scheme for me. So what I will do at some point is I will either transfer the balance that I accumulate in Nest to Vanguard or something like that at some stage in the future, but I'm just using it to accumulate. And because obviously as a self-employed person or someone who runs your own business, because the annual allowance now for your pension is £60,000, if I had an amazing year, for example, and I said, okay, I want to throw in 30k in one go, I can do that. But because I'm a business owner, if I can go back 3 years essentially and pay in, so over the past 3 years, it's gone up to 60 this year, so 60, then 40, two lots of 40. So that's what, £140,000 I could potentially pay into a pension. And that's one little thing that people don't often realize when they're running a business or they're a business owner. You have the flexibility to do that with a pension. Whereas if you use things like lifetime ISAs, you can't. But yeah, the cost of these things have gone down dramatically. So it's always a nice place to start, particularly if you're a business owner, you want to make that commitment to yourself to make sure you're paying in. This is interesting. Been to one of the summer lead course for £1, they start selling the expensive courses. You know what? I spoke to someone, I think this is in 2021. The channel was still relatively new. And I could not believe what this person told me, right? So bearing in mind, he went to this course in Birmingham, went to a course, and yeah, it was free to attend. And then obviously he has his people there and all that kind of stuff. Anyway, he bought a course, and I'm sure he said he paid something like £10,000 for a course. And I'm like, why did you do that? He goes, I thought I'd learn something. I'm like, okay, did you learn something? And he goes, not really. I mean, I learned a little bit, but not as much as I thought I would learn. And then I asked him, I said, okay, so now you've taken the course, you've learned a little bit more than you knew originally, but not as much as you thought you were going to. What now happens to your initial investment into property? Where's that money going to come from? And he was like, I'm going to go and look for investors. And I was like, but you had 10 grand that you threw into a course. That's your seed money. That's your deposit. Like, and he didn't get it. And I was like, wait for a second. Just pause for a second. You put £10,000 into a course, okay? £10,000, which I guarantee you the contents you would find on YouTube probably for free. So if you spent the time just maybe being a little bit more patient, you could have found that information on YouTube, and then you'd still have your £10,000 to put into a property. And it was like, yeah, I never thought about it that way because he was in the spur of the moment and he just didn't think. And I think with a lot of these courses, they use a lot of psychological language, and I hate it. I spot it a mile off. They'll start talking about, are you a winner? Are you a doer? Or are you a talker? They use those little subtle psychological tricks on you. So you automatically start questioning, okay, look, I don't want to look foolish, obviously. I want to be a doer. I want to be someone who who does what they say. I want to be a doer. And so they just reel you in. And it's subtle, psychological. I don't want to say blackmail because blackmail is a strong word, but it's psychological manipulation. And a lot of it goes into sales. I hate it. Do not like it at all. But he has had a lot of bad rap. But like I said, I don't know. He's probably cleaned up his act now. People do change. So hopefully he has. GT Playboy, a little bit of a reminder here that 84 people on here right now. We're at 31 likes. If we can get that up to 40, that will be amazing. Be fantastic. Thank you very much in advance. Leandro's just asking here, at what point or when do you see mortgage rates lower than inflation, at least at the same levels? That's an interesting one, mate. The thing is, right, what we have seen with interest rates, and I kind of talked about this last week on the graph when we were looking at how the UK and the US have acted and we compared them. We've seen quite a sharp, I'll see if I can bring it up actually and maybe just share the screen with you, because we have seen a huge spike in the rate at which interest rates have gone up. And I think it's really, really important to kind of be aware of that journey up and how parabolic it was, how steep it was. Because when you start looking at the question of whether or not we will see interest rates come down to be in line with mortgage rates, you can't do that if you don't have this comparison. And I'm just going to show you this because it will just give you the context of the way I see things. It will give you the reason why I'm thinking of things in this way. So that's why I normally have my background on. Didn't think of it when I did this. 1 second, guys. Which one are we doing? We look at this one. What's going on? Let's do this one. Okay, so this is our interest rate curve rise, right? Look how quick that is. We have seen a very, very quick, steep increase. Typically, you will see that kind of increase over a protracted period of time. We've seen it pretty much all in the space of a year and a half. Now, for interest rates or mortgage rates, more specifically to this question, to come down to the region which will be in line with interest rates, mortgage rates to come in line with interest rates, you will suggest what you're suggesting is that as inflation falls, you're going to see this same reversed ascent, but in a descent the opposite side. That's not going to happen. It's just not going to happen. We're not going to see interest rates fall as quickly as the rate has gone up. The Bank of England just won't do it because they would be too concerned about what damage that might actually do on the way down. So what a lot of people are speculating is that you will find that, yeah, interest rates will come down, the Bank of England base rate will come down, but it's going to be over a much, much longer period than, 2020, end of 2021 to where we are in 2023. So you could say what the best part of maybe 18, 19 months, I think interest rates will start to fall, but they'll reduce them over the course of 2.5, maybe even 3 years. So the idea of mortgage rates and interest rates being kind of on an even kill, I think is a very, very long way away at this stage. But again, that's just my speculation and just my view. I could be wrong with that. But I do think that's important for people to know, or at least maybe have registered with them so that when they're making their own decisions around what fixed rate they're going to take, because I'm still getting a lot of people asking me, should I go 5-year, 2-year fixed rate? And I'm like, you need to make the decision based on your circumstances. So for example, I've locked into a 4.75% fixed rate on a 2-year deal. The reason for that is I'm paying off a chunk of my mortgage now, and I'm going to be paying a chunk off the mortgage over the next 2 years. So what I'm going to do is I'm going to basically work myself into the ground and work my tits off, and I'm going to try and pay a huge chunk of the mortgage in 2 years' time. So by the time I remortgage at that point, yes, interest rates may be higher, they may be a little bit lower, but the amount that I'm going to borrow will be so much smaller because I'll pay off a chunk of the mortgage. That's what works for me and my circumstances. If you're in a situation where that's not going to be your reality, then maybe a 5-year or maybe even a longer term fixed rate deal could be right for you, because maybe your priority is making sure that you keep your outgoings and your mortgage cost on an even kill. And if that is if that is true for you, then perhaps a 5-year or a longer term is the right thing to do. But you have to make that call based on your own personal circumstances, really. It's really, really easy. And I'm always very, very aware of it. It's very, 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 very easy to try and make a decision based on what you watch here on YouTube, because there are lots of opinions. There are tons of opinions. And I have my opinion as well. But I would like to think, hopefully, and you guys will agree with me, that I try and give my opinion with a caveat or a pinch of salt to let you guys know, look, these are the things that drive my opinion. These are the things that are worthwhile considering, maybe thinking about, so that you can kind of discount what you may disagree with me on and discount some other bits and pieces that may be in the back of your mind to arrive at a good decision for you. It's personal finance for a reason. And it's hard to be able to know the right thing to do a lot of the time. I think a lot of people will always think about, well, what's going to happen in 6 months' time? Where are things going to be in 2 years' time? The reality is we don't know. We just don't know. So you have to make a decision based on what's going on in front of you right now. Oh dear. That's it. You're saying they left on the 21st for Corfu. That's 3 days ago. Haven't heard anything yet. I'm sure they're fine. Still a very unfortunate thing. Yeah, unfortunate timing, mate. Hopefully they'll be okay. I mean, there are flights out there today, rescue flights, so I'm sure they'll be fine. Okay, I spoke to my manager who has had 3 ex-wives, 3 sets of kids, and what's more important, 3 houses in his life. He confirmed that I he confirmed what I've been reading about, but I just finished needed that final push. Come on, dude, you can't leave. Okay, there we go. There's the follow up. The importance of money's value and the certainty it brings. However, I wouldn't ask him for matters of the heart advice, though. No, I mean, hey, 3 marriages, 3 sets of kids, 3 houses. That's a very, very expensive, very, very expensive. He's probably learned a lot, but yeah, I mean, if you don't want to go through 3 marriages and yeah, 3 divorces, that's yeah, you don't want advice from him at all. Just spoke that one there. Michael must be some feeling good to bed at night without a mortgage over your head. Peace of mind for sure. Yes, I mean, hopefully in 2 years' time, I'm going to be able to get to that point, which is a nice thought. Puts a different. It's definitely made me start to think a little bit different about what would I actually do day to day, all that kind of stuff. What do things look like at that point? Um, it does make you think. It does get you thinking. It's quite nice. What do you prefer, Pete? Investing in where are we? Investing heavily into pensions or stocks and shares ISA? Um, I kind of do both, really, to be honest, mate. Well, not presently because obviously I'm self-employed, so I have my next contributions going in. So I've got the minimum going in on the auto enrollment right now. I have been putting obviously a load of money into stocks and shares, so but that money is coming out obviously to pay the mortgage down um, because of my own personal plan. Um, but when I was in full-time employment, where I had employee contributions going in, I did both because I can't remember how much I had going in now to my pensions. I think I had circa like 12, maybe 15% going into my pensions at some point when I was employed. That's not the same anymore because obviously I'm self-employed. And that's the benefit of 1 second, guys. 1 second. Mrs. is calling. So where was I? Yeah. Where was I? Yes, I was doing both because the benefit of working for a big company is things like matching. Self-employed right now, I can't do that through my business. So, yeah, I was doing more. I was doing kind of like both, quite heavily. Definitely 12, 15% into pension, then probably about the same going into stocks and shares ISAs. It's changed now though. So, as my business grows, the hope is obviously I'm reinvesting a lot into my business to grow it at the moment. So that's using capital at the minute. But as I get to a stage where hopefully I'm a little bit more successful from a business point of view, I'll be able to plow more money into the pension because I would need to obviously catch up on the years that I haven't been contributing as much as I had been before. Magnolia Brown. What's the time? We're an hour 15 into this. Oh no, we're 43 minutes. I was going to say 43 minutes into this. All right, okay, cool. If one has fully paid off the mortgage on their share of a shared ownership property, is it possible to obtain an unencumbered mortgage to purchase another property? If you own it out 100% because you staircase the entire thing, then I don't see any reason why you can't. You may have some restrictions, and I don't know this for sure, but I'm just thinking you may have some restrictions with the provider that you staircased with, because sometimes they will have first right of refusal, right? If you wanted to sell it, for example, um, you probably need to check, but there should be any reason why you can't release equity to buy another property. That should be fine, but you'll need to check with whoever you staircase with because they may have first right of refusal on that type of thing. So worthwhile checking. Aha, right. Okay, pick a fund has just come back. Yes, the latest CPI numbers were lower. People now hoping for a pause in further interest rate rises. Market was up, but others remain very cautious. Be honest, mate. I really, really don't think that we're going to see a pause in interest rate hikes. We're not. I think we'll see a 0.25%. I think that's what's going around in the city right now as the consensus. I personally think they should go 0.5%, but I don't think they will. I think they'll go 0.25%, because I think they need to seize the initiative ultimately. And so where does the market go from there? I mean, yeah, there's a bit of positivity because yeah, inflation is not forecast to peak as high as it is. And when you think about it, the market is all about confidence, right? So momentarily we had a bit of confidence, but there's no getting away from the fact that prices are still going up just at a lower rate. And the prices are going up at a rate almost 4 times what they should be. Now, the issue is, yes, interest rate hikes potentially push us into a recession. That's effectively going to impact the stock market. Large cap, medium caps, small caps will suffer. Medium cap and small caps will definitely suffer, right? So I just think if they don't move with interest rates, they'll get slaughtered. And I think because of the optics and what it would look like if they just did nothing, it just wouldn't be beneficial. So I think we'll continue to see interest rate hikes until we start getting that inflation number around the 2%, and that could potentially mean that we run into a recession, which will have a material impact on the markets, unfortunately, and all funds and stuff out there. You're also saying here, money market funds and gilts for interest. Yeah, money markets funds probably get you good decent rates right now. UK government gilts, yes, will probably get you a decent return right now. But I think for the markets, it's going to be a very choppy time still. And it's weird, really. I haven't really tracked the S&P 500. What's the S&P 500 doing today? What is the S&P 500 doing today? Which one do I normally use for this? Let's have a look. I mean, look, as of today, according to the reports, US stocks are rising ahead of more earnings reports and Fed rates. So the S&P 500 right now, where is it? Yeah, I mean, it tells a story for sure. It definitely tells a story. It really, really does. Let's have a look. Well, one sec. Have a look at that. I mean, as things go, so this is what? This is March 23, 3851. You're now looking at 4,500. You know, we talked about last week how the positive movements and things from the Fed basically have changed the game for inflation in the States. There's confidence now, there's confidence now, and you're gonna see this through this. Whereas if you look at the FTSE 100, last five years we're flat, well, almost at a loss basically. So this is why diversification becomes such a big thing. Yes, the UK market is suffering right now, but the US is doing good. Diversification is really, really key. Really, really key. Let me just go back quickly and just see what else. Are they all up? I mean, look, get off. Get off. I mean, look at, the US 30, they're all up today. Dow Jones up, S&P 500 up, NASDAQ up, the S&P 500 VIX, which is the volatility measure, slightly up, dollar index up. Everything's up. It's a green day in the States right now. Let me see if I can find, let me just see. FTSE 100. See what we're doing locally. Can it get where are we going? Indices. Let's go major. FTSE 100, barely up. I mean, let's have a look into this as well. Let's see where we are at. I mean, so this is July. I mean, you could say we've had a little bit of recovery on the way up here, but let's say if you go 5 years, you go on a 5-year view here, we're pretty flat. Diversification is key. It's going to be interesting to see what happens, really, to be honest, moving forward. But I mean, look, it's in times like this that if you're investing, you start to, kind of question. This is a very stressful ride, right? I mean, look at this. 2020, you're down here, you get up, you're down, and then you start to see a little bit of growth. And this is through lockdown and all this kind of stuff, looking great. I mean, when you put it in context, like the lockdown period, right? Bearing in mind 2020. So this is March, right? That right there is March. Now, to consider between March and 2022 to this peak, which is April, no, May. So just over 2 years. I mean, look at that. What were you here? What were you at here? You were at 5640 here to 7592. That shows a lot of resilience, really, within the markets. And yeah, you can argue what actually drives that. There's a lot of stuff that happened and where we are right now. I mean, considering we've had so much inflation, things were going on with inflation and interest rates, I would say that actually it's done all right in terms of like it hasn't done that. I think it's done all right. And I think that's really, really important to bear in mind, particularly when you invest in the market. And sometimes it can be it's very, very easy to get fixated on, oh my God, my money is constantly dipping, it's constantly going down. But when you zoom out and you look at the entire picture, if you invested 5 years ago, you haven't lost any money. If you invested at that low point in 2020, right here, if that was your entry point into the market, you're pound cost averaging in, you haven't lost any money. You've actually made money. And I think that's really important context for people, because sometimes it is very much doom and gloom. Oh my God, the world is going to end. This is the financial crash of the century and all this kind of stuff. Well, it could be, but in the context of what? And your entry point really does matter. Your entry point matters a lot. And it's impossible to time the market. It's all about your time in the market, which is why the pound cost averaging, paying on a monthly basis, is so beneficial, because it takes the worry away of all of these peaks and troughs, the rise and the peaks that we've actually seen. But when you compare this view right here with what the S&P 500 has done, I would say that the S&P 500 has done way, way better. We've seen less volatility. It's almost been like a proper incline up here. When you start, where was it? I've lost the other tab. I was just going to revert back to it. I would say that the journey's been very, very different, but it feels, I would argue, maybe a little bit of the same because of news and maybe some media voices and things that you'll hear out there. So who knows what's going to happen next? Well, I think if you're investing for the long term, this comes with the territory. This is a really good question, Leandro. I mean, the answer is, mate, I don't know. I mean, look, is there a safe rate? The rates are the rates at the end of the day. If the rates are 7%, 6%, that's what you apply for. The question is, can you afford it? And they will take you through the affordability criteria, because they have to. If you can't afford it, then don't take it. If you can afford it, then yes, take it. But making sure that your affordability isn't like razor thin. Because if your affordability is razor thin, it's not going to work. It's practically, you'll feel like you've got a noose around your neck. And I think a lot of people have probably fallen victim to that. Interest rates have been extremely low, and therefore they bought bigger houses than they could afford. Their affordability was razor thin, and now they've done that on a 1.49, 2% mortgage rate. Now they're going to be remortgaging, going on to a 4 or 5%. It heaps on a load of financial pressure. And so I think it's about being really in tune with, number one, your own finances, your own personal circumstances, and what your affordability is telling you. And to be honest with yourself, can I really afford this? Ideally, you want a financial cushion, £300-400 a month after you've paid your mortgage, you've paid your bills, or as much as you possibly can. If you're taking out a mortgage and all your bills are being paid and you've got like £100, way too thin. And people who have taken up mortgages like that are the ones that are unfortunately going to get wiped out, or will be feeling a lot of financial pressure now, because they're staring down the barrel of £200, £300, £400 mortgage increments per month because they went razor thin at the very, very beginning. So what can you afford, I think, is the better question to ask rather than a safe mortgage rate. And you'll know whether you can afford it when they take you through all of the affordability criteria. I like this. I like this a lot. Look, people do get annoyed of ads on YouTube. I have so many people who message me and be like, "Oh, why are there so many ads in your videos?" It's like, literally, hang on a sec. I'll see if I can actually just show you something. You think like a channel of my size doesn't make a lot of money when it comes to like AdSense on YouTube, unless I work with a brand and they sponsor content. I don't make a lot of money from doing these kind of lives. If anything, if you think about AdSense and what I would be able to generate in terms of revenue, right? So let me just go on to my last financial clinic that I did, which was, when was it? Let me just go backstage here and I'll show you this. When was the last one? When was the last one? The last one was on the 16th of July. So it was like, what, a week, a couple of weeks ago? Feels like it's about a week and a half ago, right? So if I go into my analytics and I have a look at how much I get from AdSense, where is it? Analytics, here we go. How much I get from AdSense. This is from YouTube, right? This is from YouTube paying me for people watching ads, right? And I'll show you this because I'm more than happy to share, right? Because it is interesting. Because people would say, "Oh, man, you make a lot of money on YouTube." Right? That's how much revenue I got. £5.22. Now, that one lasted an hour and 4 minutes. An hour and 4 minutes of me just conversations, answering questions, trying to be as helpful as possible. £5.22. That's lower than minimum wage. So, when we talk about ads on videos, it is the only way, it's the little way that I'm able to earn a little bit of money from the videos here on YouTube. It isn't a lot, unfortunately, because my channel isn't one that is getting, 10,000, 15,000 views. And the annoying thing about live videos like this is it's not immediately monetized. So I can't put ads into a video of this length until tomorrow. So by tomorrow, it would have got the bulk of its views anyway. And through that, people wouldn't have seen ads. You may see one ad at the very, very beginning, but you wouldn't see anything in between, right? And that's typically where, if I do earn a little bit more, that's where I earn a little bit more because people see those ads in the middle if they're kind enough to watch. So yeah, I mean, and this is why I say, if you click the like button, it means that more people get to see the video potentially, which could help me uptick that £5.22. But yeah, I mean, this is how YouTube effectively works. Luckily, it's not my only income stream. But if I was doing this purely for the money, I would have jacked this in a long time ago because it's simply just not worth it a lot of the time in terms of the exchange of time that I give for these things. And the reason why I bought the finance clinics back was because we are in a bit of a precarious situation right now where people are, they don't really know what to do. They're under pressure. And I think I've got a knowledge base that I think people can benefit from. So, we're 59 minutes right now. Why not spend an hour or so? Even if I do get £5.22, if it helps someone, then it helps somebody, And the reality is, my missus, sometimes she's like, "What are you doing these things late at night?" Because, sometimes it is 7, 8, 9 o'clock when I'm doing these things. That's time I could be spending with her. And she gets really annoyed with me sometimes. But, this is where we're at the moment. And we'll see what happens. But yeah, please do smash the like button. And if you choose to watch an ad, it does actually help the channel. It really, really does. Judy, I have 20k in my ISA. Got it at 3.75%. Should close it and get another for a higher rate. No, don't do that. Don't do that. Don't close your ISA, because the minute you close it down, you can't go and put your 20K back in. So if you're hunting around for a new rate, what you need to do is you need to find who the new rate is with. So let's just say you've got it with Barclays right now at 3.75. You want to go over to here in Halifax, and they're offering you 5%. You go to Halifax and you ask them to transfer the ISA from Barclays. So Halifax would apply to Barclays, take the money over, and transfer it over to them. Do not close it, because you will not be able to pay that money back into your ISA, because you'll be deemed to have used your allowance depending on when you paid that £20,000 in. So you need to do a transfer. Do not close the account, Judy. All right. Okay, cool. We're an hour now. So I'm just looking at the comment section here. Really good engagement. Thank you so much, guys. But I do have to clock off. So yeah, look, I don't know what the schedule is going to look like for this week. I've got to go to Greece on Friday for a wedding that I'm not going to be back until like early hours Tuesday morning. I'm probably going to be knackered at that point. So content's going to be a little bit light over the next few days. And to be honest, I was thinking of actually taking a bit of a break. Like I said at the beginning of this, I wasn't feeling my best over the weekend. And I feel like I need to pause a little bit and just maybe rethink about things and what I'm going to do with kind of like the channel in terms of the live things that we're doing. I enjoy doing the lives because it's more interactive, but to make it sustainable is really the next thing. And off the side of this as well, I'm also of the mind of building more of a business behind it, which doesn't necessarily align with YouTube. And so as that starts to build, I'm going to have to make a choice between the devotion of time between the two. And that's just where I'm at the moment. So I might be taking a little bit of time off just to kind of make my mind up around that. I might even just go traveling for a bit, for 2-3 weeks. And that will mean that I won't have as much time to do lives unless I'm from a place where I get a decent Wi-Fi. The plan I'm thinking at the moment is maybe Austria, Switzerland, that part of the world, maybe a little bit of Italy. But I'm not sure yet. I haven't decided. But once I do know, I'll let you guys know. But I appreciate every single one of you for watching. Apologies if I didn't get around to your comment. But yeah, I've got to bounce. Got to do some stuff and get ready for a busy day tomorrow. So guys, catch you later on.
Yeah, surprise, a little different than you used to. Yeah. Dropping these bars on YouTube, knowledge I introduce you. Yeah. We chasing this money like it's the prize, it's the voodoo. Fugazi, fugazi, it's just a lie we buying into. We need some cars on deck. Get the rollies, get the Moe, all the Mars on deck. We got the traders, got the picture with the Bentley in Dubai. Are you dripping in designer looking fly? On the bombardier, sipping on the wine. Broke man, we broke. Where's the fun in being broke? Stocks and bonds get you yo. That's what I'm teaching these folks. I see that smoke, see them choke. Getting coke. While I'm researching these stocks, buying coke. 20 months on the channel, million people taking note. I got a warrant for Buffet. I'm coming for his vote.